Hey everyone! Welcome back to our channel. If you're new here, don't forget to hit that subscribe button and ring the bell so you never miss an update. Today, we're diving into an exciting and often misunderstood topic, private equity. So, what exactly is private equity, and why does it matter to you? Let's find out. Have you ever wondered how companies grow from small startups into industry giants? Or how certain businesses seem to flourish overnight? A big part of that journey often involves private equity. So, let's break it down. Private equity refers to investment funds, typically organized as limited partnerships, that buy and restructure companies that are not publicly traded. Unlike stocks you can buy on the stock exchange, private equity investments are made directly into private companies or public companies that are taken private. In fact, as of 2021, private equity firms managed over $4 trillion in assets worldwide. That's a huge chunk of change and speaks to the significance of this sector in today's economy. Some of the most well-known private equity firms include Blackstone, KKR, and Carlyle Group. They raise capital from institutional investors and high-net-worth individuals, pooling these funds to acquire companies. For example, Blackstone acquired a majority stake in the popular hotel chain, Hilton, back in 2007. This investment was significant because Hilton was struggling at the time, but Blackstone saw potential. They invested heavily in renovations and strategic changes. By the time they took Hilton public again in 2013, it was valued at over $20 billion. That's the power of private equity. So, how does the private equity investment cycle work? First, a private equity firm raises a fund which lasts about 10 years. They then identify potential companies to acquire. After acquiring a company, the firm works on improving its operations, increasing revenues, and ultimately preparing it for sale or public offering. This process is often called the buyout, where the firm buys out the existing owners, and then they implement strategies to enhance value. For instance, think of companies like Instagram. Before Facebook acquired Instagram for $1 billion in 2012, it was a small startup. The investment from Facebook allowed Instagram to scale rapidly, innovate, and capture market share, leading to its explosive growth. Private equity investments can be categorized into several types: buyouts, venture capital, and growth capital. Buyouts involve taking a controlling interest in a mature company, often using significant debt, aiming for operational improvements and strategic exits. Venture capital, on the other hand, invests in early-stage startups with high growth potential, like seed or series of funding for innovative tech companies. Growth capital provides additional capital to established companies looking to expand, often taking a minority stake to fuel expansion without losing control. Each of these investment strategies has its own risk and reward profile. For example, venture capital investments can be highly lucrative but also come with a higher risk of failure. On the other hand, buyouts often come with established companies that have proven business models, but they may require significant capital and operational improvements. Now, let's talk about the risks and benefits. Private equity can offer high returns, often outperforming public equity markets. However, it also comes with risks, including illiquidity since your investment is tied up for years, and the potential for high debt levels if the firm takes on significant leverage to finance acquisitions. But it's not just the investors who benefit. Many companies have transformed their operations and expanded their market reach thanks to private equity backing. Entrepreneurs often cite the expertise and resources that private equity firms bring as crucial to their company's success. So, to sum it all up, private equity is a powerful force in the business world, helping companies grow and innovate while providing substantial returns for investors. It plays a critical role in the economy by fueling growth and creating jobs. If you're interested in investing or just curious about how businesses operate, understanding private equity is essential. Thanks for joining me today. If you found this video informative, give it a thumbs up and share it with your friends. Have questions or topics you want us to cover next? Drop them in the comments below. Remember, knowledge is power, and the more you know, the better equipped you'll be to navigate the financial world. Until next time, stay curious and keep learning.